Today's webinar is about transactional related to fixed assets. In this series of webinar, this is day 5. So let us move to today's agenda. In day 5, the first agenda is what if analysis. Then we will create accounting entries and transfer to GL. And last, we will perform mass copy of assets from corporate book to tax book. Right, so let us start with today's webinar with what if analysis. Right, so move to next slide. The process flow of what if analysis. What if analysis is a feature that allows you to simulate different depreciation scenarios for your asset and compare the result. You can use what if analysis to plan your asset management strategy, optimize your tax benefit, or reevaluate the impact of changed depreciation method or say rule. Right, so that is the what if analysis. The first step for running a what if analysis. So enter the parameter to identify the hypothetical assets. You can specify the asset category, cost, date, place in service, salvage value, and other attributes of the asset. So hypothetical asset, you can specify the asset category by asset category, the cost of the asset, and date, place in service. You can put the date, place in service, and if you want to have a salvage value, you can put the salvage value also, and other parameters of an asset. Then step 2, enter the depreciation scenario parameters to identify the depreciation rule to be used in analysis. You can select from predefined depreciation method, book, and calendar, or create your own custom scenario. Right, so you can enter your depreciation scenario parameter to identify the depreciation rule to be used in the analysis, and you can select from predefined depreciation method, a book or calendar, or create your own custom scenario. The third step, run what if depreciation analysis. The system will calculate the depreciation expenses and net book value for each scenario and period. You can view the results in the what if analysis report. Right, so let us quickly navigate to the application and perform the task what if analysis. Right, so let us navigate to the application now. So log in with the credential. Log in with the credential of KC Brown. From the navigator, navigate to your fixed assets work area. So let me navigate from here and select as asset work area. Select the asset work area. From the task panel. So right now I am in the US Corp asset book. I have access to US corporate book and US federal and US IAS book. These are two are tax book, right? This is the federal tax book and this is IAS tax book, right? So two books are associated to this corp book, the corporate book, right? So let us first perform the what if analysis. Select the task, perform what if analysis. You can analyze the asset by asset number, asset type, right? So these are the criterias and you have the depreciation scenarios, right? So you can have a one asset number, create the asset number. Through that asset number, with the from asset number to asset number, or say depreciation expenses account to expenses account, and you can have a date place in service to date place in service, right? So that is different criteria you can have, and then category, right? So if you want to analyze an asset based on the asset you booked in your corporate book, you can analyze by providing the asset number to asset number, or you can provide a single asset to that asset only, and the asset type, mentioning the asset type as a capitalized or CIP or what. So that analysis you can do, and then you will provide the depreciation scenario. Say it is a straight line method of 3 years, or you want to analyze for, say, if it is in 5 years with a depreciation of a straight line, or say written down method with a 5 years, how the asset depreciation will happen and how it will impact in our books. So you can have one scenario out of that, right? So we will take a first hypothetical asset, right? So we will go with the hypothetical asset. So let's select that hypothetical asset, and I have got the access to 3 books as I mentioned, that is US corporate book, US federal book, that is tax book, and US IAS tax book, right? So let us take a book as take a federal one. Let's take a book as a federal one. Select the currency as different currency is associated with that particular book. So that is Euro book or USD. You can analyze it according to that. So I am analyzing in USD dollars, and the number of period of analysis, right? So that is, I will select as, say, take a 12 months. 12 months, and the starting period, right? So my first period out here, the open period is July, right? So that is the July period. My open period is July, and I will select the category. Let me select a category. So since we are doing the hypothetical analysis of an asset, so we don't have to create the asset in the asset book. We are just hypothetically calculating that asset, how it's going to impact our book, and to analyze that. So I am selecting one of the category, that is equipment manufacturing, and I am selecting the date place in service as July, the 1st of July, and let us mention the cost of the asset. Let me mention that cost of asset. Say it is cost as 285,000 as the asset cost, $285,000 as my asset, since it is in a USD dollars. So asset, I will not provide any depreciation reserve right now, and the depreciation scenario I want to select as say a straight line method. Right, so take it a straight line method with 30% as a bonus depreciation. Select that, and the life of that particular is 3 years, and the depreciation associated with that particular life is 3 years, and the 0 month, and prorate convention I am selecting as mid month, right? So mid month I am selecting, and the salvage percentage value, let me select salvage percentage value as say 3% as my salvage percentage value. So let us analyze for a 12 period. The number of period to analyze is 12, right? So let us submit that. So this request has been triggered and generated, that is 6353542 was submitted to create what if analysis data, running what if depreciation analysis report when analysis is completed. Say OK. Let us navigate to the ESS page. Cancel that. Navigate to the ESS page, that is under tools. Navigate to schedule processes. Go to hierarchy, just refresh that. Here we are. So analysis report, hypothetical prepare. First it will prepare the hypothetical depreciation analysis, so it gets succeeded. Then it will run for hypothetical depreciation analysis report, right? So let's select that, and we will view the output of the analysis. Let's republish that. Export to, I will see through HTML. You can download in PDF. So you can see the book as US Federal. We have selected as a US Federal, and the beginning period as July 23, right? So the period we have selected as July 23, and the equipment manufacturing we have selected the category, and the cost we have provided as 2,85,000 as the cost of of a material, that is item that we have and to analyze, and the method is straight line method, and the currency is USD in the USD, and the number of period to analyze is 12, and the date in service we have selected as July 23, and depreciation reserve as said 0, and the salvage value is 3%, and the convention, the depreciation convention or the method is mid-month method. And let us view the analysis. Let us scrolling down. The category is equipment. So you can see the method. The life in service is 3 years. The salvage value and the depreciation. The July month of depreciation. Right. So that is how the depreciation and the analysis you can do. That is of 12 months. That is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12-month analysis. We are able to view that analysis. The what if depreciation analysis report is comprehensive report that shows the detail of each scenario and the period, as well as the difference between the scenario, and you can also use the report to compare the outcome of the different what if analysis and make informative decision about your asset management. So let us create a one more analysis with the same category, right? So same category with a different method and having a same convention, right? So taking the different convention, right? So let us take that different convention and the salvage value will be the same, right? So let us take that same scenario. So this is the, let us create a one more analysis. So let me first export that, republish, go to export and PDF. I will download that particular report so that we can make a comparative working of that particular analysis, right? So that is the main objective behind that. Let me download that report. This is report 1. Say what if report 1, right? So selecting that, save that, let the things complete. Just open that. Let us create a one more analysis with the same parameter, right? So we will have a one parameter out here. So here we are. So let us re-navigate to the asset work area again. So navigate to the asset work area, and from the task panel perform what if analysis, and again we are taking the same hypothetical asset, right? So currency, again I am selecting as a US dollar. Again we will select the period as 12 months period, and the starting period I am taking as same as July 23rd, and the book is again I am selecting as federal, right? So we have selected that federal book, and the category I will select the same category. So equipment manufacturing, place in service date place in service. So that is also I am selecting as the 1st of July, and the cost is 285, right? So that is the cost we have mentioned in the same, 285, right? 285,000, that is 2,85,000 US dollars. And the depreciation method, we will select different one, right? So we will select the different depreciation method. So let me select search with MASC. So let me select as, so let me select that as a convention, as one of the conventions, so that we can understand that, right? So that is the mid quarter, or say, let me select that. This method I am selecting, and the period you can decide it out. So that is the period of life in service. So let me select a one very simple one. Let's take that simple one. Let's say straight line method, right? Select that straight line method, simple straight line method. Different method you can apply to that, right? So that is how scenarios can be. So let us select that scenario. Let me select that as STL, straight line method. Let me select that straight line method with 50% bonus depreciation, right? So that you can use as that. So let me select the last, what we have selected as straight line bonus, 30 bonus, and out here we will select, we have selected the 30% bonus, right? So let us select that 50% bonus, right? So straight line 50B bonus with a straight line of 50% bonus depreciation. Select that, and let me like that. Just hold on. Let me cancel that. Just be like what if analysis, selecting the period as my July 23rd, currency as USD, 12 period, and the book is federal book, and the category, select the category. So search with that. That is equipment manufacturing, and the date place in service 1st of July. The 1st of July, the cost is $285,000, and the depreciation method as STL with a 50% bonus depreciation, right? Selecting year as a 3 and the month as 0, and the mid month as our convention, as we have taken the mid month, and the salvage value, that salvage value we had taken as a 3%, right? So let us put the 3% out here, similar, and submit the same. So that analysis has been submitted, the request got triggered. Let us view that report. So let us navigate to ESS page, that is Enterprise Scheduler Process, the schedule process. Under the tools, schedule process, select that. Let us re-navigate again. Schedule process. Just refresh that. Get succeeded. Let's view the report. Republish. See with the HTML view. So that is straight line 50% bonus with a life of 3 years, right? So let us view the report. So you can see the depreciation out here, how the depreciation has been calculated on the monthly basis, right? So that is the depreciation of 12 months, how the depreciation has been calculated. Right, so that is how you can analyze, and out here you can see the depreciation with this amount in the July, and out here you can see the depreciation. You can take the decision on the basis of that particular report, right? So, and a different convention you can use, different combinations you can use on that particular asset category, using the asset category and different depreciation method. So you can analyze your asset, right? So let us move to the next topic of the today's webinar, is to create So let me download that also. Just download that, the PDF. One with the 30% bonus, one with the 50% bonus. And let us move to the next topic, that is creating account entries and transfer to GL, right? So let us navigate to the asset work area. Out here you can see this is my corporate book, right? So right now I am in the corporate book, and the depreciation open period is August, right? So my August is depreciation period, and if I go to inquire the asset, either I can go to the inquire asset and view the recent addition, that is in the month of August. You can view the 3 asset has been added, right? These are the 3 assets, that is 1127004 and 1127003 and 702 is the 3 asset has been added in the US corporate book in the month of August, right? So let us run the depreciation. Let us calculate depreciation. So if I select the period, that period last, my open period will be the 31st August 23, and the book is US corporate book. The book class is corporate, and the ledger which is attached to this corporate book is US primary ledger. The last created mass addition is it is providing, the last depreciation run that it is providing. So you can see the 3 complete addition has been there and the complete retirement also. So you can drill down through here itself. So if I select this, so I will navigate to the same asset inquiry page with the 3 assets. And if I again select from here the complete retirement, if I select that, you will navigate to the asset inquiry, that is recent retirement. You will see the recent retirement of these assets out here. So the reason behind that retirement is extraordinary, and 3 are in sale, right? So they sailed out of that particular asset, right? So this is how we can drill down to that particular asset. Now calculate the asset. So calculate the depreciation on the asset. So let us select that, calculate depreciate asset. The asset depreciation was submitted. If you want to view the calculation process, you can navigate to the ESS process to view the depreciation. So let us navigate again to the enterprise scheduler process to view the depreciation. Let us refresh. So it gets succeeded, right? So calculation of depreciation has been succeeded. Extract report data has been succeeded, right? So you can view the log file of that particular extraction and calculation of the depreciation also. So you can view the log file also. So the next step is to create accounting and transfer to GL, right? So that is our create accounting entries and transfer to GL. So let us select calculate lease also. If you are following the lease expenses, then you can calculate lease also. And from here task panel, you can create accounting. You can run one job called create accounting. Select your book, that is my US Corp book, and the end period. The accounting mode is draft or final. These are the parameters you can use. If it is a draft mode, then it will not transfer to your GL. So you can see the transfer to GL is no and post to general ledger is no, right? So that is, it will not transfer the data to the general ledger. And if I select as final, so there is, you can see the report style is detail or no report or summary. I will select the detail, and whether you want to transfer to the GL. If I say yes, then it will transfer the balances from subledger of fixed asset to general ledger. And if you want to post it down, then you can select yes. If you don't want to post it down, then you will select the no, and separate process will be run for posting of that in the general ledger, right? So that thing is there. And the general batch, you can provide the batch number also. So batch number you can provide. So I am fine with that. Relevant details and parameters, let us submit that same. Let us submit. The process has been submitted. Let us review the process in the, again going to the same ESS, that is scheduler process, ESS page, enterprise scheduler, and let us refresh the process. Create accounting of asset. For asset, you can see the running in the process. There are multiple sub processes are running. Let us refresh and review. I have not closed my depreciation period, right? So I have not closed my depreciation period. There is some issue with that. Let us review. Create accounting execution report. You can view this report. This report is very important. This will tell us what are the errors behind that particular while we are running the process to this. Let us view that. See, there is lease expenses. The error is related to lease expenses. Number of warning is 1, and so these are the basically a lease expenses related. You can view the error behind that. The accounting period event is reversible by the accounting entry wasn't replicate in the secondary ledger or the reporting ledger of US reporting currencies SLA Europe. The detailed manual journal adjustment should be done in the secondary or the reporting currency to record the impact of the reversal. So these are the some of the errors. Period of lease. So period of lease, that is first error warning, it is giving to that. And now if I go to this other journals, so you can view the journals. So if you select the journals, select out here, it will navigate to that particular journal, right? So that is the one journal, that is lease period of July 17, that period, right? So that is how the error you had to rectify, right? So that is the rectification you had to do. So our entry has been posted. Let us navigate to the general ledger and view our entry, right? So that is, let us navigate to the GL. The general ledger work area. Just hold on. From the navigator, navigate to the general accounting. Moving to the journal, that is journals. And to the manage journals, from the task panel, manage journals. That is my data access is US primary ledger, right? So make sure that that is the data access set. And my period is August, right? So that is the August period 23, and the source is my fixed assets, right? The asset, that is Oracle Fusion Asset Subledger, and search with that. So you can view the depreciation of the asset, retirement, and the transfer. So let us view one by one of that. So let us view just was the depreciation. So you can view the depreciation out here. Right, so that is the depreciation it has calculated on the asset. So if I go to the one of the depreciation debit amount, so depreciation related to intercompany, right? So that is US crop book. And cancel it down that. Let us view with the transfer of the asset. So let me select that. That is the cost, the asset number and the transaction number and the period it is mentioned in the line, right? So view the transaction. If you go to the view transaction, you can view drill down to that particular transaction. That is subledger journals, journal lines, right? So that is, so there it is, the transfer, right? So that is how the things are being performed in the, and how the create accounting and transfer to GL. We had not closed the period. If we going to change anything in the asset or say any figures we are going to change in the asset work area in that particular period without closing that particular period, that is August, then it will again roll back the depreciation, right? So that depreciation will get rolled back. So let us navigate again to the asset work area now. So our next topic is related to mass copy, and before that let us view the and go to the inquire asset. Let us go to the inquire asset, and this is the August period. You can go to this particular asset, right? So office building, if you go to the depreciation, you can view the depreciation charged to that particular asset with the pro rata convention as this monthly, and the life of the P as a method, depreciation as the straight line method with the 30 years, right? So the life and service years remain is 29 and 7 months is there, and the pro rata convention is 29th and 7, right? So that is the remaining life of an asset. So if you go to the cost history, the asset has been added, and if we go to the source line, it will provide you the source line. So if we go to the source line from the project, it has come from the project. So the asset can be added from various sources. As in the day one, we have explained the asset can be added manually through spreadsheet, that is ADFDI and FBDI template, or direct integration with the other application also, and through projects, right? So project module also. So project number it is mentioned, from that you can view the detail of that particular source details, right? So again go to the transaction. If I go to the transaction, let me select transfer. So you can see the view accounting. So you can see the addition of the asset. Go to the analysis. Analysis of journal entry. So you can see the cost, depreciation expenses, and cost clearing. So right, so that is the cost clearing, cost, accumulated depreciation, right? So that is how the things you can view and analyze the entries, journal entries. The catch-up depreciation, right? So let us now move to the next topic of that webinar. The last topic is periodic mass copy or initial mass copy or perform initial mass copy. So let us move to the PPT again. Periodic mass copy. In Oracle Fusion Asset Management, the periodical mass copy feature is used to keep your tax book up to date with your corporate book. You enter the asset in the corporate book, then you copy that to your tax book, right? So that is how the things are performed. And Oracle Asset copies the new asset and transaction you made in your corporate book during one accounting period in the current financial year into the open period of your tax book. You can run the periodic mass copy on each tax book after your close period, each period in the corporate book. First you have to close the corporate book, then you will perform the depreciation. First you will perform the depreciation, then you will perform the create accounting. After the create accounting, if your books are closed, then you will perform this task, right? So you run the periodic mass copy for each tax book after your closure of each period in the corporate book. The period mass copy program copies the additional adjustment, retirement, and reinstatement transaction to your tax book from your current period in the associated corporate book. It does not combine the transaction or say transactions and only copies the transaction from closed accounting period in the associated corporate book. Since the tax book shares the category and assignment with the associated corporate book, you do not need to copy the classifications or transfers from your corporate book to your tax book. Right, so let us see the steps. So steps is copy the new asset and transaction to made to your corporate book during one accounting period in the current fiscal year into an open period of your tax book. You run a periodic mass copy of each tax book after you close your each period in the corporate book. The periodic mass copy program copies the additional adjustment, retirement, and reinstatement transactions to your tax book from the current period in the associated corporate book. So let us navigate to the application now to view how the tasks are performed. So let me first navigate out here. Yeah. So this is my corporate book, and if I see my USIS tax book, let us navigate and select that USIS tax book, and my open period is July, right? So that is my open period is July. And if I go to this inquire asset and view the asset, in the July month only one asset has been added, that is 112695, that is TR56 cards. And if I go to July and the June, you can see a one asset has been added, right? So June there is a one asset, and in the May there is no asset. In the April, that is, you got a 1 2 3 4 5 6 7 8 assets has been added to this IAS tax book, US tax book. So let me select with that core book and see with the asset inquiry, and you can see in the month of July there is one more asset has been added, that is this one. You got this asset already added in the tax book. And if I go to the June, one asset is already there, and out here also. Similarly, in the May, there is no asset. Similarly, out there also in the corporate book, there is no asset. And the month of April, there is 8 assets, right? 1 2 3 4 5 6 7. One asset is missed out, right? So that is, you can view one of the asset has been missed out. Duplicate. So that is, might be the leased asset. Let me check it out with that. Navigate to the asset inquiry. Go to the recent addition. If I go to the month of April 23, that is 1 2 3 4 5 6 7. 7 is there, right? So there is, all assets are added, right? All assets are added. So only in the month of July, if you view in the month of July, the one asset has been added, right? So that is, one asset has been added. So how to perform that particular task in copying that particular asset? So let us navigate to the ESS page. So my July period has been closed, right? So my August period is open. I want to copy the July month, right? So that is, one asset has already been copied. Now the one additional asset has been lying out there, which is not copied to the tax book, right? So that is how we going to do that. So let us navigate to the ESS page, enterprise scheduler, go to the enterprise scheduler process and schedule new process. Let us select that job as mass copy, enter that. It will be a perform initial mass copy. Here we are. So you can see the initial mass copy. Select that, copy the asset from corporate book to the current open period of tax book, right? So that is, I will select that and say OK. I will select my tax book out here. So 2 tax books are there, that is, one is federal and one is IAS tax book. So I will select that and submit the same. It does not ask for any period right now. since my open period is July. Let us performing the initial mask copy. Let us refresh. It will show one error, that is one is already been added and one asset has been added, the asset number it will provide. So let us refresh the same. So it gets succeeded and there is a warning, right? So there is a warning. So let us view the what is warning is all about. So the output log file, you can view the log file. So let me select the log or say text, go with the text. So open that. So you can see these assets has been added. I think so previous assets are also been due. So these you must enter the lease payment schedule of this leased assets. So you can see the number of record processes 39, warning in 23, failed 0, right? So that has been added. Let us review with that particular detail in textbook, right? So let us review the periodic mask copy. Just hold on. Go to this log again. Open the file. So you can see the one asset, two asset has been already been added. Is there adjustment? The asset has been added, this asset, right? So let us review the same in the application. Let us review the same in the application in the textbook. Let us navigate to the asset work area or say inquire. Go to the inquire. We go to the inquire asset. Whatever. Let me search with that IAS with the tax asset number. This is the asset number added into the book, that is IAS asset number. Search with that. So you can see the asset has been added, test revaluation, and same asset has been out here also. And you can view the straight line method with the life year as 4, straight line method with a 4 year, and the prorate convention as monthly. The 4 years in the tax book. If I go to the corporate my book, it is life year is 5 years, right? So that is the 5 years. The asset life in convention, I have taken the straight line method, but is the asset life is I have mentioned as 5 years. Out there it is 4 years, right? So that is, it has been copied and you can view. Let us navigate again to the asset work area. And change the book, asset book to IAS. complete edition 41. Here we are. So these are the asset has been added. Right, so that is how the things are been performed in the asset, and periodically you change any changes to the asset. Say you reevaluate the asset, then you run the periodic mass copy. It copies the asset and the transaction from the corporate book into the current open period of the tax book. Right, so this is all about the mass copy. Please note that corporate book period must be closed before you can copy the information to your tax book. It is very important to be noted that you should close your period in the corporate book, then only you must copy that asset to the tax book. Right, so this will conclude our webinar of today. So thanks for joining the webinar on fixed assets related to transaction process in the Fusion application. Thank you.